HUL numbers trickling in, and the stock is already up almost 2% as we speak right now. And this time around from HUL, we were indeed expecting a decent set because 40% of its portfolio was supposed to be benefiting out of the GST cuts. But along with that, because of the price adjustments, there were some disruptions that were expected. The first numbers that we get is consolidated revenue. 16,241 is what the ticker is flashing, and compared to the estimates, 16,025 was the estimates, and the numbers look better than what the street was penciling in. Consolidated profit at 2,685 crores. That too is seen to be better versus the estimates of 2,570 odd crores. And along with that, let's also have a look at what the margin trajectory is looking like, and specifically in terms of the operational performance. That is something that we will be watching out for. In terms of the expectation, let us tell you that UVG, that is the underlying volume growth, is expected at 2 to 3%. So we'll be watching out for that. In terms of the EBITDA, 3,729 crores is what the company has reported. So operationally as well, the numbers seem to be better than what the street was penciling in. And on your screen, you also have a quick scorecard as well, where this has been a beat versus the street estimates, and definitely the stock has been showing a decent move throughout the start of the day, and post the numbers as well, we are seeing the stock increasing its gains, almost a 3% jump as we speak right now. The key to watch will definitely be the commentary of the management. How do they see the pricing and the volume growth going ahead? And along with that, the underlying volume growth is something that the streets will be keenly watching out for. We also have Kaustav Pavaskar with us. And Kaustav, your first take on HUL numbers seems to be a better set versus the street estimates. What's your reading?
So, revenue numbers were largely in line with what we were expecting for the quarter. At EBITDA level, the numbers are better. We were expecting around 22.1% kind of EBITDA margins. EBITDA margins came at slightly better than what our expectation of at around 22.9%. So at EBITDA level, I think performance is better, but this quarter there was a transitionary impact. We need to monitor how the performance would be in the second half of the year, especially when GST benefit will, start kicking in, and whether it will have any positive repercussions on the volume growth in the quarters ahead.
Kaustav, we'll be waiting for the management commentary also, which is likely to begin also. But having said that, do you also agree with the GST-led disruptions and trade incentive would limit the near-term realization? But in the coming quarters, we will see a stable margin, and Photon on all the fronts will be seeing better numbers?
See, at least we should expect, if at least from the volume growth perspective, if, this GST rationalization helps in the categories where competition intensity is high, whether if volumes pick up in those categories, I think we might see, better numbers in terms of revenue growth. Margins, obviously, it depends on also it depends on how the raw material price momentum would be, because companies have already passed on the benefits, and also they have taken price cuts whenever there was an opportunity when they have seen raw material prices receding. So I think the impact on the margins would be with a lag, but I think at least we should expect, volume growth momentum to improve in the second half of the year.
All right, so optimistic outlook for the second half, but we also have Snehi with us, joining us on the phone line for some more number crunching. And Snehi, seems like a good set by HUL, but in terms of the segmental performance, is the beauty and the well-being and food division itself that has seen a good growth on a YY basis. What's your reading?
Well, absolutely. So if you take a look at HUL's numbers, it's actually looking like a beat, because if you take a look at the revenue numbers, slightly higher than what we were estimating, PAT much higher than what we were estimating. EBITDA seems like an inline to a mild beat. We'll get back to you with the exact number over there as well. But yes, margins also are looking quite good, and contrary to what they had given in quarterly update that they had given for the first time about, it looks like there was some mild recovery towards the end of the quarter, because at least that is what the numbers are suggesting. Segmentally also it's looking good. In fact, we were expecting some pressure on BPC, and home and food we were expecting for that to be better, but it looks like a good set of numbers that have come in. So yes, we are at the location right now at the HUL headquarters, and once we have more updates on the volume front, we'll get back to you.
All right, Snehi, thank you so much. And yes, we'll be waiting for the management commentary as well. But then let's again get connected with Kaustubh, who's the expert with us connected. Kaustubh, so nearly 40% of HUL's product portfolio, I'm talking about soaps, shampoos, detergent, toothpaste, and packaged foods. The impact expected was almost 18 because of the GST transaction. There was a impact expected leading to short-term channel destocking and inventory alignment. You think that has nullified, or maybe the impact that we were estimating, it has not come up on those lines?
In fact, I think that impact would be there for another month or so, because the home care and personal categories, the shelf life of the product is a little bit on a higher side. So churning of the product is little bit slow compared to what the food categories is, and whatever the inventory been on the shelf. So I think there will be another month or so kind of impact. I think by end of quarter 3 we should expect that impact to be out of the shelves, and I think we should start seeing gradual recovery in the volume. So as I said, that the categories like shampoo, soaps, and wherever the price cuts or the GST rate cuts have been taken, I think those categories would start gradually witnessing uptick in volumes, and I think we should start seeing it from Q3, and the benefit would continue in the quarters ahead. Q3, Q4 volume growth will improve.
Thank you so much, Kaustubh, for being with us and explaining us the numbers today. Thank you so much. But then let's also welcome our expert and guest on the show. We are joined by Kunal Bothra and Mr. G. Chokhalingam. Good morning and welcome both of you on Buy Now, Sell Now. And before we proceed and start taking our viewer queries, Kunal, I'll come to you. So the results are out, and on all the front, it's almost beating the estimates. Let's do a tech check with you, Kunal. What do you have to say?
So I think HUL is one of the stocks which I believe should be bought on dips, and the stock has gone through a decent uptrend over the last 4 to 5 days. I think from 2500 to now 2600 plus levels where the stock is trading right now. I'll wait for some bit of retracement over here. Even as we speak, I think the stock has cooled off from the day's high. So I would believe say closer to 2600 levels or slightly below those points could be a good entry range for HUL.
All right, so that's the take coming in on HUL, but do note that there's an exceptional profit of 184 crores, and adjusting to that, the profit will come in line, and maybe one of the reasons why the stock has cooled off from its highest point.